Hello, guys. Dividend Enjoyer here, and today I'm going to be talking about my $36,418 stock portfolio. But before I get into it, I want to ask you guys to please hit the subscribe button. Please hit the like button. It helps the channel out a lot. I think we're growing really well, and I really appreciate all the support. But without further ado, let's get into today. It was a good day for my portfolio, up $357 today, or about 1%. I'm feeling really confident overall with the portfolio and with my positions in general. Overall, I'm up $1,219.16 or 3.46%. Really feeling good about the future of, just everything. It really feels like we're turning a page overall in the markets, and it feels like everything's really starting to come back. But I really see in the rotations right now, and I think that the biggest rotations that we're seeing are specifically from defensive stocks into tech. And we're seeing a lot of money going back into AMD and Nvidia. Nvidia, obviously, with some pretty good earnings from what I saw. Not a stock that I currently hold, but it is good to see that tech's doing well. But there is also a concern that AI isn't going to make any money. That's something that Wall Street's thinking about. And I think it's very hard to speculate about. But I will say that with the stocks in my portfolio, one man is betting big on the future of AI. And that, of course, is Mark Zuckerberg with ticker symbol Meta. And I kind of think that if Mark Zuckerberg thinks it's worth throwing so much money into and developing and risking his own, business and his own position of power and everything really that's funding his lifestyle and what he has the majority of his money invested in his company Meta, if he's willing to fully pursue it and embrace it, someone as knowledgeable as him has a plan, and it's probably a very sophisticated, very well thought out plan. And I really trust Zuckerberg in that regard. I think that Zuckerberg is a visionary. I think he's very misunderstood. And I think he has a different level of understanding about these things. And really, I have to say, no matter what you think about the person, you think he's strange, whatever, Meta is a very powerful company. And I think that in the long term, Meta is going to perform very well. I'm very excited for Meta in general. I'm very excited to be a Meta shareholder. And I think I really got in at a good price and I made good calls about Meta in general. Um, but, I really wish I had bought more because I kind of knew that it was undervalued, but I chose to go more the Amazon route instead of the Meta route. That was kind of my pick because I thought that it was less risk. I still kind of align with that idea, but I do think that it was a very opportune time, and I knew that it was undervalued. And my own DCF analysis was showing it worth between 650 to 750. I think that's what it was at the time, and that was before some more recent earnings. So I was buying. I think I bought two at $600, one at 484. Sold off a little bit, obviously, but still have a decent chunk up. Again, 44.66% is an unbelievable amount to be up. I kind of think I should liquidate it. I think that might be the smart play. But long term, I think this stock has the ability to be exponentially growing, especially if Zuckerberg figures something out that's really valuable. So I think it's worth it to just have $1,000 in there right now, just to kind of see what's going to happen. If it drops more, obviously I'll pick more up. I'd be very happy to pick more up. What I do have to say too is that this stock has a history of being very volatile and moving very much. So it could come back down. But and again, I've trimmed a decent amount. I've made a decent amount of money off of Meta, but I do wonder if I should maybe take a little bit more off the table, being up such an extreme amount with such a small amount invested in compared to some of my other positions. I really think that it could be good to sell out of my Meta and maybe get into like a waste management or something like that. But these are internal debates. I kind of think that long-term Meta is going to do very well, and I think that Meta does have a lot of chances to make a lot of money. So I think it's worth keeping invested and staying with the long-term idea that Zuckerberg has, as I've already taken some profits. So I've already made a little bit of money off of them. Another one that I've shaved some of my position from has been Hasbro, ticker symbol HAS. This was, other than Salesforce, this has probably been the stock that I've been ridiculed the second most for buying. My analysis was strictly on Wizards of the Coast, on Magic the Gathering, how I kind of felt about Hasbro there. I really like the stock. I think that the stock is very strong. I think that the stock has legs. I think that it's going to do very well in the long term, and I really believe that Hasbro is a great company. Um, I think that they have a lot of valuable IPs as well, especially as they make them more digital and they do things like that. I really think that Hasbro has a lot of chances to grow, not just in Wizards of the Coast, but in other areas as well. But I really do think that Wizards of the Coast, and specifically Magic the Gathering, Dungeons and Dragons, are some of the most valuable IPs that they own. And as we move forward with single people having more disposable income and people who are adults being more willing to buy kind of collectibles and board games and things like that, I think that we're going to see an uptrend in Hasbro stock, and I think that the value of Hasbro as a brand is going to increase, especially with the card games that they have, because essentially the players of these card games are giving Hasbro a license to print money. And I like any company that owns a very valuable monopolistic IP like Magic the Gathering, which is the best tabletop card game you can play, probably the best strategy game out there, maybe debatable Hearthstone. But I really think that Magic the Gathering adds a lot of value to Hasbro, and I really like Hasbro as a stock. I think it's been beaten down. I think the expectations are down in the dirt, and I really like that. And obviously, it's come back a lot from where I had bought in, but I really think that we're going to continue up. And, the yield is not bad either. I actually did think about buying more of this, but I did shave a decent percentage as well because I think that there are some concerns with, just tariffs. And I also don't love the rest of the business. Okay. I'm not necessarily a guy who's excited about a toy company, especially nowadays in 2025. I don't really know. I guess the margin's decent on them, but I'm really more invested for Magic the Gathering. That's what I'll say about Hasbro. God bless them. I hope the rest of the business does really well, but that's the main thing that I'm looking at is Wizards of the Coast and Magic the Gathering. The rest of it I don't really care about nearly as much. Moving on to Prologis, ticker symbol PLD. This stock's up $130.18 from when I bought, or 7.91%, which is honestly, a pretty good return for a REIT. Honestly, a very solid return for a REIT. This is specifically a warehouse REIT. I think that the value of warehouse space is going to increase. I think that they're going to be able to charge more rent. I think that we're going to see more data centers as well. I'm sure they're going to be able to outfit some of their spaces for that. Maybe not. I mean, maybe that's a stupid synergy. But they got a lot of warehouse space. And if you think warehouse space is going to be more valuable, I think that they're the company to invest in. It's so interesting because I actually had used AI to find Prologis originally because I was looking up videos to do interesting stock analysis videos on. And PLD was one of them. And I thought, man, this is a good company because it's very easy for me to value and do a DCF on. I did my DCF on it, and I looked at it and it looked undervalued, so I actually bought some. And the earnings were really good. The stock actually, I think at that point, had gone and popped at like 117. I mean, it was insane what the stock was trading for. It really bobbles in and out. I mean, if you can get it in those low hundreds, it's a pretty good deal. I'm not going to say it's a bad deal here because I still think it probably is undervalued at this price for what it is. But you also have to look at with having REITs or any really high dividend kind of stock that you own, and this is a pretty high dividend yielding stock. Just one of the things that you have to compare it against is people who are living off of any kind of retirement income or any kind of bonds or things like that. And so they're going to look at that bond that's secured by the U.S. government and safe or CD or whatever, something that's FDIC insured, zero risk to them of default, versus Prologis, which is an independent business. Very low chance of, going under, but, there always is that chance, right? So if you have one option that's zero risk and one option that's, 1% risk, you're always going to take the zero risk. So I think that there's actually not as much demand for stocks like Prologis within the market because of that, because a lot of the people living off of that retirement income would rather opt in for a very low risk choice. So I think, that's kind of like a conspiracy theory thought to have, but I really do think it's a real thing. And I think that people are going to flock in, and there's going to be a higher demand for high dividend yield stocks, and I'm not going to sell mine as rates start to come lower, because as those rates come down, it's also going to be better for the refinancing. I think that that's an element of it as well. Um, but I don't know. I really like Prologis. I think that it's a big brain play. I think long term it's going to pan out very well, and I like the stock. Moving on to Texas Roadhouse, ticker symbol TXRH. This is one of the two stocks that I'm down in currently, down $122.65 or 5.16%. And, I'm just going to hold this for a very long time. I actually don't even think I'm going to reinvest at all or anything like that. I bought it because I thought that there was a very high chance that long term they could open a lot more restaurants and make a lot more money. I think that's the way that they're going to go. I think that it's probably at a good price here. But the main thing I'm looking at, again, is that they're going to be able to continue to open more stores over time. And long term, I think I'm going to make a lot of money off of Texas Roadhouse. I think I'm just going to collect the money from it, though. I really like this business. I think it's very efficient. I think it's very well financed. I think there's a lot of growth here. I'm not necessarily looking at many more restaurants. I'm not really a fan of the sector overall, but I think that this was a good investment at the time, and I think that I would like to just keep this investment. I'm just holding it. I'm not necessarily thinking either way on it. Long term, I just want to collect those dividends. Hopefully they continue to increase the dividend, and I don't plan to really sell anytime soon or in the future. I just plan to really hold this stock and kind of see it through. I think 2,400 is a good amount to invest in, and hopefully I can get decent returns in the next couple of years. Next up is Apple, ticker symbol AAPL. I really called this stock, guys. I just got to say that. I was very confident when I said 210 or below. This is undervalued. A lot of people thought that Apple was a ridiculous company. For a long period of time, it was looking like Apple was, going to have the IBM or Alphabet fate and just be labeled boomer stock that would never get back to, its pre-2010s glory. But Apple has proved the haters wrong once again. Apple has taken some dubs. I've gone along with them. I was pricing the stock, and I was like, guys, when it was at 200, I was like, guys, you got to get in on this. 210 or below, I think that this stock looks nice. That wasn't financial advice or anything. I was just saying it to my best friend in my basement. But, I did very well. I made a lot of money off of Apple. I mean, I haven't liquidated all of it, so I could still do very poorly. But I think that the stock was very undervalued. I think that we're going to see 260s at some point. I don't know when. I'm not really necessarily pushing them. I think that they're always looking long term, and I think that they're actually looking long term. I think that's very different between a company like Apple versus a company like, I don't know, most other companies. I mean, you could literally name one. I don't want to put anyone on the spot, but Apple long term, I think, is a very good investment. I think the hard thing is getting into it at a decent price where you think it's fair, and really just actually holding true to holding the stock for a very long period of time. I've held the stock for a very short period of time, done very well, but I think that's because I bought it at a very cheap point. I don't think anyone else is going to get the same kind of opportunity. I don't think that the opportunity's here. I don't think it's coming back. The $6 billion investment definitely changes the valuation as well. I think that makes it higher. I think that we could see new 52-week highs out of Apple. I'm going to say that. I might sound insane saying that, especially with all the growth concerns that are still there. But I think that they're in Trump's good graces. I think that Trump likes Tim Cook. I think that Tim Cook is cool with Trump. I think he navigated this perfectly. I think that if anything, it just proves how good Apple really is, how much talent they have. They're just looking for the right problems to solve, and they're looking for the problems that make sense to solve. And maybe there's going to be some big innovations from AI that they miss out on, but that's okay because they're still going to have that money that they would have had to invest in the AI. So I think that the valuable thing for them is going to be to integrate some kind of AI into Siri or some of their other ecosystem of products. I think it's going to make sense to just take someone else's AI and implement it into the Apple ecosystem, because I think that's where Apple can really make their nut and really make a lot of money. is in the actual iOS user and in the iOS ecosystem, because everyone wants to get to their user base. Their user base is extremely diverse, extremely huge, and generally has more income. So it makes sense that Apple is a very valuable brand still, because that's a very valuable thing. Another intangible thing that I really talked about with Apple and really wanted to stress about Apple when I was talking about it in those videos that I was, and you can go back on them on my channel. They're fully public and available to look at. It's an Apple stock analysis, or maybe it was a video on why Apple was undervalued. Did very poorly. Video did terrible. But in the video, I kind of said that there are intangibles where Apple has a lot of power as a company. The fact that they are worth like 3 trillion, something around there, right? Kind of signals to you that they're going to be able to influence politicians, different groups, and really get what they want. And if a company can do that, and if a company has that kind of power, there's intrinsic value related to that. And you have to bake that into your valuation, because Apple is no normal company. It's not like a Campbell's. It's not like a Kraft Heinz. It's not a Sherwin-Williams. It's Apple. They can do a lot more things than everybody else, and their name means a lot. If you believe in brand image and the value of brand image, Apple is the king of that, along with Nike. I think that this stock is a very good long-term position to have, and I think that you're generally going to win. I think that we're really going to see the return of just shut up and buy Apple as a strategy for trading. And I'm very happy to have gotten in at a very cheap price. I'm going to hold the rest of these shares. I had shaved a little bit just because this was honestly an impulse investment where I'd seen that it was very undervalued. And I took a little bit more money than I probably should have and swung for the fences. And I made the money back because I knew that it would go up. I just knew that it was undervalued at that point, and I knew that we were seeing something where there was a lot of fear in the market that didn't make sense, and I made a lot of money off of Apple. We're up, $341.04 on it now, or 14.06%. And I think that the stock still has a lot of room to grow. I think that we're going to see a new 52-week high, because I think with this investment, the cash flows are just going to be so much better into the future. And I think that we're really going to see a lot of winning off of this transaction. I think that this transaction made a lot of sense for Apple, and I think that they're going to reap huge rewards from it where everyone can win. And I'm very happy to be an Apple investor. Yeah, so that's my opinion on Apple. Next up, I got American Express, ticker symbol AXP. This is kind of the same thing as Apple, where it's very difficult to want to actually invest in this business. It's very expensive at first. It's got a high P ratio, and it really just looks very expensive from a DCF perspective, until you realize that the business is extremely monopolistic, has a lot of advantages, and a lot of things really going well for it. And every year, as long as there's more transactions, they're probably going to make more money. And they just continue to grow year after year in terms of revenue, and it seems like their business model is very solid. I can't really say that much about American Express other than I really like them. I think they're very boring. Their business model is very safe. And I really think that this company is going to do very well into the future. Obviously, I'm up $409.91, or 15.92%. And I believe that this now is the biggest gainer in my portfolio overall, not by percentage, but by total amount. So really, second highest next to Vici. But very happy with this stock. Very happy I invested in this stock. Wish I'd bought more when it was lower. And just one of those stocks where it's very difficult to be able to get in, but once you can get in at a good price, you really want to buy a lot whenever this drops, and you really want to be watching this stock like a hawk to get in at a good price, because it's a very difficult stock to get into. But again, once you can get into it at a good price and just hold, once you make that commitment and you actually hit that buy button, you feel so much better once you have it, because it just will continue to grow. That's my experience with it. I've had it drop, though, down to the 230s before. I held on. I'd actually, I think, bought one share around there, 230, 240. So The stock does move sometimes, but it's very rare you get those opportunities. I think that we've had a really good opportunity this year to buy. I don't think there were a lot of very good opportunities to sell, to be honest, other than maybe at the beginning of the year. But I really think that we've had a very volatile, chaotic year, and hopefully AI can be the technology that can carry us up. But I'm betting on American Express either way because I don't know how the future is exactly going to go, but I know American Express is a business that I can hold for the long term and reliably see growing into the future. Next up, we got Amazon, ticker symbol AMZN. I really like this business. I think it's very strong. I think you got a very big cash cow business, funneling basically money into all these really extremity small businesses that are hooked onto the Amazon ecosystem, whether that's Whole Foods, Twitch, Amazon Grocery, just really random things. The book division that's got to still exist in Amazon in a really big capacity. So Amazon basically has, the shipping empire and monopoly on shipping and packages. And because of that, it's able to fund a lot of other little projects and side things that can lead to more money. And I think that over time, Amazon's going to be extremely profitable. We can see that the stock is up overall $468.39 in my own portfolio, or 13.67%. I sold about 3 shares, so I'm down to 17 now, but I really want to hold this to 52-week highs. I just needed some money, guys, and I felt comfortable selling a little bit. I mean, I thought it was a smart move. I still think it's probably a smart move to take more off the table, to be honest with you, for me. But I really think that AWS is going to continue to be a big deal. I think that Amazon's going to continue to look for the long-term goals, which is what I really like as an investor. I don't like when they cave to Wall Street. I like when they look outward and try to really grow everything. And I think that Amazon, you're going to see the results of what they're doing a couple of years ago in the next couple of quarters. And I think that we're going to see really big growth. I think that there's a lot of talent at Amazon, and I really like Amazon as a business just overall. Next up, we got Waste Management, ticker symbol WM. This is the stock, guys, that I'm looking to add more to. I'm up $66.99 or 1.51%. Currently earning $65.98 in annual dividends from this stock. This is a business that I want to invest a lot more into. I think it's a very extremely defensive company. Very strong business, able to weather a lot of economic uncertainty, but it gets rotated out of when people are more willing to take risks and get into tech. So this is my opportunity to buy some Waste Management. I think I got to save up some more money and actually really commit some money to Waste Management because I think in the long term, it's going to be paying me handsomely to have bought into Waste Management. I'm also split between Salesforce, though. I kind of think it's still a good time to buy Salesforce. But I'll talk about that in a second. But with Waste Management specifically, I think that you're getting a very, not guaranteed, obviously. We don't use the G word on the channel. But a very likely chance that the stock is going to grow in the next 5 years. And I kind of would like that as, a low-risk opportunity to make some money. I think that this is a very low risk business in terms of the future of the business. I think that it's very recession proof. I really like Waste Management. I think that what they're doing is, very cool. And overall, it's probably undervalued right now because everyone's rotating out of it. I like the business. I want to invest more in this. This is the primary thing that I want to invest more into. I think that long term is going to perform very well. I just got to get some more money in, but this is the number one thing that I'm looking at right now is Waste Management and adding more of that to my portfolio. And next up, Vici, ticker symbol Vici, is also something that I was really thinking about because the dividend yield was, extremely high. This is obviously a real estate investment trust in kind of, leisure and, I mean, they own a bunch of casinos, but they also own a lot of experiential real estate. That's the word. I think that they're very well run. They seem to outperform in every regard. I think that there's honestly a lot of talent there, and I think that there's a very high ceiling for this type of business model. Especially when you have tenants that are paying well. And I think that these guys are just, they're able to fund a lot of projects. They're very ambitious. I like the long-term planning of this. I think that we're in the right environment over the next 3 years, that once we get the rates down, this is going to make a lot of sense. I think this is really a very slept-on stock. I don't really even want to sell any of it because I think it's going to be so valuable in the future, just because I really think that, that land on the Las Vegas Strip truly is irreplaceable. A lot of the contracts also scale with inflation. They're not actually running the casinos, obviously. They just collect the rent because they own the buildings. But Vici overall, I have to say, I really think long-term is going to do very well, going to weather a lot of storms. Obviously, I'm up a lot on this, $437.12 or 6.5%. But that's not including the $200 of dividends I've also earned. So this is really the stock that I'm up the most on in the portfolio. And also, I talk about this in pretty much every episode now, but the stock makes over $1 a day for me, which, is really awesome. Something that I think, I was really looking forward to is when Vici would be at that point, and I finally hit that investment threshold. And, I'd really like to get more in Vici. I really think that long term, it's going to perform very well. I think that the dividend's very stable. I think that the company is well funded. I like the amount of cash flows that you're getting for the cost. Got a low price to earnings ratio, which is expected for a real estate investment trust. But it also was the earliest real estate investment trust to go from IPO to the S&P 500. And I think that the stock is going to just continue to grow. I think that the value is there. I know that they were in talks to work with the NFL on some kind of deal to try and own some real estate with them. But I really think that Vici is a very strong business, and I think that there's a lot of growth here. And I would bet long-term on Vici. I really would. I think that Vici's a very strong business and able to weather a lot of storms. And I really enjoy being a Vici shareholder. I've talked about it for a long time on the channel. When I was buying more, when I was looking at it, I really bought a lot below 30, and I really was very hard on myself early on because that was an investment that I could have put more money in when it was below $30 a share, and I didn't. I just bought more other things when they were way more expensive, including a lot of the tech that you see here. A lot of those shares were actually mistakes at the time, in my opinion. Because I didn't buy Vici at $30 or below. I only bought $5,000 worth, and I had more money. I just wanted to diversify it, and I really thought that was a huge mistake, and that was a stupid idea. And it was a stupid idea, and it was a mistake because I knew what Vici was worth according to my DCF model and according to all these things, and I was getting a good price on it, so I should have just gone into that. And it was a very easy business for me to understand compared to a lot of the other businesses. Not that I don't fully understand. Like, obviously, you're not expected to understand everything. You just have to understand the business idea. But I really thought that Vici was a very boring pick, and it was much easier to value than really a lot of these other companies that have more bells and whistles to them. So if my DCF was telling me that, it meant it more, if that makes sense. It made more sense to me if my DCF model was telling me that Vici was undervalued versus a Meta. Because Meta, there's going to be some intrinsic value there. You kind of have to look at the cash flows a little bit differently and at the modeling a little bit differently. So I really felt like I had missed an opportunity there, and I was very critical with myself early on in the channel because of that. But ultimately, it ended up working out, and I ended up being able to buy more below the $30 threshold. And I've made a decent amount on the stock. Again, over $600 made on Vici so far, and going to just continue to collect dividends into the future. I mean, this is literally paying me over $1 a day just to hold it. So I'm just going to hold it. Finally, we got Salesforce stock, ticker symbol CRM. Guys, Salesforce was rallying today. It was exploding upward. I think everyone's kind of realizing that their business model is not just going to be, totally replaced overnight, and that we're still really going to need Salesforce in general, and that Agentforce is going to work. I think that people are also anticipating a better than expected quarter out of Salesforce. So people are loading into this stock. I think that it's still at a very attractive price here. I think that long term Salesforce is going to do very well. And again, I'm really split between going between Salesforce and waste management for what I want to invest in the future. And I kind of have time to wait to see what the price action does for each of these. I mean, if neither of them moved at all, I would probably pick like 50-50, but I would be going more towards Salesforce just because I think it's more undervalued for where it could go. But I'm also thinking, do I want less risk in my portfolio overall? The answer is probably yes. Most definitely. I want to take some more risk off the table, and I think Waste Management does that better than any other company in the S&P 500 and in the stock market just in general. It's very split on what I want to do. It just depends on if I want less risk or if I want potentially better growth prospects. So I think we're just going to have to see. I mean, if Waste Management rallies up more, then obviously I'm going to go with Salesforce. And if Salesforce has a killer quarter, I'll buy some Waste Management. So we'll just see. I think it's really going to depend on Salesforce's quarter. I think if Salesforce drops further, I'm going to add more. But if Salesforce increases, then, I'm probably going to have to go with Waste Management. So that's probably how it's going to go. That's how I'm going to play it. Now that I'm thinking about it, that makes the most sense. Thank you guys for watching. I really appreciate you guys. Have a great rest of your day, and bye.